Stop down from 905. Okay, so I believe that old Phil Billy, that proverbial market maker that everybody says doesn't exist, selling short inside of that last suspension block. It's a bullish up close candle, and I'm interested in seeing this thing break down aggressively. You can trade to the order block. I'm trying not to overthink it, to be honest with you. I think that they're going to go for that sell side at 805. 830 looks good too. All right. So now, because if this body can close, there you go. It can trade to a high of that suspension block again. I don't want to see any bodies outside of it. If it looks like it's going to do that, I'll just collapse the trade. Hmm. We would have traded down this 795 in that fair value gap in white. I would have done a better job of running long and trying to short it here, because I could have took the same idea here. I wanted to see it rally up and then fall short of all-time highs and then look for a short and then go long again. That was my intentions to go today. Like I wanted to do several things. This feels good because they left that sell side at 805. They didn't take any sell side. Just started running off of Tuesday's relative regular trading hours opening range gap high. All right, so I'd like to see it get heavy in here. They might want to send one more time up to get people thinking it's going to take that all-time high out. I think it's going to go back down into Monday's opening range gap, and then trying to decide whether or not I want to take partials at 830 or 864 half as my first partial, just to get something for the trade. All right, that looks like it wants to come back up inside that suspension block. If it does, I'll add. There you go. And give me a little bit deeper of a higher up into that suspension block. And no market replay. No market replay. Mm, in a perfect world, it would just drop right from here, but change this now. We've done the run above that, so fade it out a little bit in color. So it's done the work there, and it's done the work here. Change that. All right, so now the active line above the all-time high. Scoot this over here a little bit. I wish the bodies would be a little bit more bolder with the wicks. All right, so see that little fair value gap right there? Add to it there. I'm watching that wick. Premium wick. Hmm. There's a there's a saying that the really, really good trades are the ones that are I don't want to say words like I'm not afraid, obviously, but I'm more concerned about the outcome of this trade. And they usually say those are the most powerful or the best wins. I'm not sure if they mean because you overcome something, the trepidation of it, but it looks like we're going to get to the high of that suspension block. I'm waiting. I'm trying to fancy the. Okay, I like that. But don't run. Just give me a chance here. All right, keep it there. Keep it there. Keep it there. All right. Yes, I'll take that. So we have the high of the suspension block. So I've averaged basically consequent encroachment of the suspension block. So half of it, and we'll prove my concept here. Uh, Ultimately, so what I'm trading on is the idea that they'll leave all-time highs there intact until they take out sell side. The question is it the 830, 26,830 sell side or 805, 808, 805 area? I have my limit order down there in the event that it really starts to fall out of bed. Hmm. I don't want to lower my stop yet because I don't trust the order block, the last up close candle. If I were making the market, I would drop it out of the downside of this orange box I have shaded, which is the suspension block. I would take it outside of it one more time, and then I'd come up there and I'd wick it, but leave the high intact. Don't take the all-time high. Keep the high of day there, and then start to work lower, but do it quickly. I mean, I'm demanding it does it now. I mean, I'd like to see it just fall out of bed, but I'm concerned about lowering my stop right now. The way it looks, and because they ran it straight up from 745, I know Phil's going to be active today. He's going to be running crazy wicks. So while these candlesticks in the range that we have here, this is actually nice. It's almost like normal market conditions. I just don't trust it. So we're at consequent correction of the buy side and balance, sell side inefficiency. Trying to keep my eyes on the candlestick as it's breathing. There's there's like little telltale signs like that right there. That right there, that's Phil. That's Phil. See how fast he snatched it up out of there? So there's a minor sell side, and see, there you go. Just don't take the stop. Oh, see, look at that. Oh, look at that. Oh, that's definitely Phil. Well, if we break down below 864 half in convincing manner, I'll try to pair some of that. I'm going to take rotations here. Hold on a second. All right, so I want to see it start to really break lower. And the key is I want to see it do it with speed, a lot of distance while it moves down. So far, I like the candlestick the way it is right now, but I want to see it really try to traverse lower. I'm gonna resist the temptation to take something off here. I only got 20 micros on, so it's not even, it's like the equivalent of 2 minis. That would be a good partial right there. And I lowered that stop. I'm trying to determine where I want to go because I still anticipate some crazy wicks. The thought process is obviously they ran higher and they got real close to all-time high and failed to go there. So now everybody's holding on to it, looking for that bull flag to, the pan out that's now been, it's just been decimated. So I don't think they're going to give a lot of opportunity to get out for the longs with stops at 26,830. So I'm just trying to determine how many contracts I want to take off. If it can get to that, do I want to market it off or do I want to put a limit order in? All right. So we have a little bit of a sell side imbalance, buy side inefficiency, and a wick. So we'll start with annotating the bearish fair value gap and watch what we do with that first. Hmm. I'm trying not to worry too much about the color. I'm more specifically watching. There you go. Lower stop. The the candlesticks. So if I'm correct, the sell side imbalance, buy side efficiency here. If it trades to the upside of that, the wick on the up close candle right before it, the that wick's consequent encouragement, I'm eyeballing that. It could trade up into that. In a perfect world, it would drop heavy right here and not even come back up any higher. I'd like to see that. Denying the highs, coming back for sell side. So in my mind, I'm thinking if I was long and I rolled my stop to 830, would I feel safe here? And I personally wouldn't. So that means if we start to roll towards that 26,830, it should do it quickly. Bodies have to stay in the lower half optimally. That fair value gap. We're just watching that premium wick just above the high of the fair value gap. If it just prints it on a wick basis real quick, snaps it up there and keeps the bodies down, then I'm still golden. I won't worry about anything. I don't want to move the stop yet. So we traded back to consequent encouragement. I like how that closed there. That wick. Yeah. The body's got to stay below that wick. Consequent encouragement. All right. Let me show you this wick right here. So the bodies, they have to stay below that. And just because you guys are going to get a fast recording, I'll just type it out real quick too. Under here. Fix that. All right. So sometimes when I post these short sped up videos with a song, I don't think I'm going to do a song today, but let's make this a little bit more prominent so you can see my expectations. It's hard to interpret that in a sped up video, but people try to say I add those comments after. Oh, that's nice. Look at that. Very good. Oh my goodness, I'm getting lucky here today. But some people say that I add the comments after the fact that they're not organic to TradingView's platform. Don't I don't think that's you know something that people should waste time on. You can clearly see I'm using the platform to type in. Mm. Think think that 830 low or those relative equal lows. I think I'm going to put something as I exit there. Let's got the equivalent of 3 minis on. I have in 30 micros. So let's do fives, five contracts. Um, I do want to move that stop. So I'm wrestling with the determination of whether I want to do the stop first or place the limit orders to get out. I'm kind of leery about putting the limit order in there because I'm thinking it could spike down here and take my 26,805. And right there is where I think I need to be putting some orders there. Let's just do it now. All right, so this line here. Wait, can I do that? I can't grab a hold of it now. Come on, man. Get on my nerves. All right. Just go real slow. Wait till screw it. Let's just move out of the way. All right, just sticking this up and annotate it. Minor sell side liquidity. There, left bottom. Yep. All right. Let this read the bed a little bit by bringing myself something in this. I don't want to see it like stuck, like stagger or like spend too much time around that high, the Monday's regular trading hours open range gap high at 840. I want to see it kind of like really just go through that a lot. The sell side imbalance it just formed out of that bearish fair value gap. I'm looking at consequent encroachment of that. The wick, the lowest reaching wick. Um, perfect world, it would just drop right here and just give me at least a partial. But I think I want to layer buy limits just below that 26,830 level. I don't want to see all of that SIBI give up the entire range. I want to see the upper portion of that. Ideally, if it wants to take sell side, it'll leave the upper portion of that big black sell side imbalance buy side inefficiency open. But with those wicks, it makes it it's a little hard. Let me scrunch this up a little bit so you can see the relative equal lows. And I'm going to put this up here just a little bit higher, right just beneath it. There you go. I just don't trust it today. I know they're going to be in here doing some monkey business, and I'm hoping I can at least get off one of the partials below 830. So we're gonna have to retrace a little bit. I'd rather that it doesn't do it. I don't want to dress it up with too much annotations because I'm trying to avoid being distracted by having all that stuff on the chart. But I know I'm going to speed this video up and show it to you on X real fast to prove that it was done real time because it takes a long time to compile the video when it's being done with Camtasia. Okay, let's show you the SIBI here and the consequent encouragement. All right. Hold down the here. All right. So let's change that. Come on, TradingView. Come on. There you go. Why it does that? So as long as it stays out of there, I'd like to say stay heavy. So that portion that's the upper portion, that sell sign and bounce buy sign efficiency. Add one more order underneath there. Leave me 20 on, and then the take profit at 805. But that sell sign and bounce buy sign efficiency, in a perfect world, it'll stay below that consequent encroachment. And there's a the wick that touched that consequent encroachment level. Now my eye and my focus is staring right at that, and I'm watching how we create new candlesticks and how eager is it to stay away from that midpoint of that wick. I've I found I've had to really, really focus on what the candlestick is doing and how fast when there's a little disturbance inside of its formation, like I gave you before we ran out the high of that suspension block. Okay, so we hit. No, I want to see it get heavy here because there's a inversion fair value gap that would form just to the left, but I want to really see it take that limit order out. All right, so we're gonna put one there and there. So now I've layered a nice canopy of buy limit orders. So if this thing starts to drop off, which right now we're inside of a bullish fair value gap, I think that's going to be inverted to allow for lower prices. But I don't like that wick we just touched, the consequent encouragement to the CIVI. I don't want to see a body above that. If it does, I will collapse half the position. And I'll have to do it like in fast market orders. So I'd like to see it just stop right here and go the other direction, but I don't think they'll take the I don't think they'll take that wick high out, but it needs to stay in the lower half. The bodies need to stay below the midpoint of that wick. Oh yeah, Phil is online. He's definitely online. This is artificial here. This is not algorithmic. I don't want to see 859 at all. 26,859. I don't want to see that. All right, stay heavy in here, stay heavy in here. Come on. It either wants consequent encroachment of that premium wick or it wants to take the stops that would be just above that wick. And I don't want to see it trade above the wick high. I don't want to see that at all. That's problematic for me if it does. I'll have to bail on half the position. And 10, either 10 or 15 contracts if it gets above that wick. Stops or we want consequent encroachment of that wick. Yeah. If it were bullish and it wanted to take out those relative equal highs and take the all-time high out, it should just run straight up from here. But because I'm bearish and I think they're going to come down for the sell side, because they didn't run anything before they ran from 7:45 Eastern time all the way up to falling short of the all-time high at 26,901 3/4. So the fact that it's not ripping higher here tells me I might have to weather half the position being taken off if it takes that wick out. The bodies have to stay below. Let me show you this wick right here. So like it needs to say stay below here. I'll just borrow this. All right. So as long as it keeps the bodies of the candlesticks below that, I'm golden. It should get to my first partial, or maybe two or three of them. That's good. I like that. That looks good. Monday's regular trading hours opening range gap high. That's that shaded gray area. That's what it's defending. Like it's working that level there. So what's actually occurring is they're manually keeping it here versus where algorithmically it would have already delivered down to 804, 80, 802, something to that degree. But they're okay. Maybe see if they'll loosen it up a little bit. Get below that gap to the left of us and act as inversion. Looking good. Looking good. Good little dog whistle action. Oh, you dog. You dog. Come on. Ah, come on. That ain't. You're being rude now. Come on. Well, give it a chance. There you go. There you go. Two of them. All right. So we've taken two partials off, and let's move the stop down a little bit. So that way, hopefully, we can see a continuation lower. We're inside that bullish order block at 818. Hmm. I would have I would have really preferred it took a lot longer draw and larger candle to the downside. It's struggling here. I think that they're going to want to take it up to that inversion fair value gap. I'll give it a moment. Let's see. Yeah, they're holding it. They're definitely holding it. The last line of defense is the high of that Monday regular trading hours opening range gap. The height of that gray shaded area. That's my point of failure. If it starts putting a body above that, I'm gonna look to peel something else off. So far, it's a nice little market maker sell model. Selling short at the smart money reversal. Yeah, I think they're gonna go back up inside that. They already got me drawn out to inversion in the making. And low to the high. Drag this over here. Color's appropriate, so I don't have to worry about changing anything. So you know what this looks like traditionally. So if it trades up in there, the bodies have to stay out of the upper half. I'd prefer it just use the lowest portion of that fair value gap, inversion fair value gap rather. Ideally, if it doesn't go there at all, that's wonderful because if it starts to drop here and it gives me my next limit order, that would be stunning. It looks like they want to take it up there again. So it would need to do very quick rejection of that. It's already spending too many candles inside that SIBI to give an institutional order for entry drill. So when there's multiple candles like that and it hasn't dropped off, that's indicative of wanting to go back to at least consequent encroachment of the SIBI, or in this case, there's a inversion fair value gap just above us. Oh, it might make me a liar. Look at this. It looks favorable. I don't like it stalling like this. I don't like that. Yeah. We got that inversion fair value gap. It's too deep in the sell side of the curve to add anything. So hopefully it'll give me more information where I can trust to lower that stop. I'd hate to see it all the way up, come all the way up there in a, well, last year I was reiterating what I've said many times before. Um, when I started teaching all my concepts and whatnot, some of the people that got a hold of it tried to rebrand it, and they show you the little teachings. They call them FU candles. You know the bad word FU candles. I said they didn't exist. That's not a thing. But this year we're seeing the actual birth of them, where you see these 100 point or 100 handle candles come out of nowhere. Trump tweeting, something like that, or sometimes it's you don't even know what's going on. All right, let's see how we trade here at the low of that inversion fair value gap. So where it's at right now, it's almost a given it's going to trade into that inversion fair value gap. So my focus is in the consequent encroachment of that. So it has to keep the bodies below it, I guess. Well, at or below it. Let's say it that way. Okay, so we tapped it there. Perfect world, it should drop right from here, but unfortunately, you always got to give it an opportunity to see if it wants to get in there for a deeper premium. But if it's valid, it'll it'll keep price in check, and the body should stay in the lower half. I'm contemplating putting my limit order just beneath the low that's formed in this recent drop down, and I'm arguing. I'm arguing with myself and internally saying I'm feeling the concern about manipulation coming in. Is they could spike it down there and print below my limit order, but it not fill me because they took it out of that range too fast. That's what I'm wrestling with inside my mind. I'm wanting to take something else off because it's already in my mind. It's spending too much time for my liking. So consequent encroachment is just in striking distance. Um, there it is. It booked it. All right. So now it needs to keep the body at that level or just make, there you go. Perfect. Perfect. Mwah. That right there, that is how it looks. That's perfect. So I want to see it trade down and accelerate through the low of the price run we're inside of. Don't go up there anymore. What are you doing? I want to see it stay heavy in here. I don't want to see it revisiting the inversion fair value gap at all. Like I want to see it stay heavy here. Oh, now black stretched out limousines. There you go. Come on, come on, send it down there. My focus is Monday's regular trading hours opening range gap, consequent encroachment. So the way you see that is where the text is to the left. I'm sorry, to the right of the chart, where it's labeled that dotted line. I want to see it trade to that and accelerate down through it. And let's put a little bit of chef kiss annotation, so that way you see it in the recording, sped up still. Too big. There you go. I hope that shows up on X. If it doesn't, sorry for your loss. Alrighty, it touched it. That's encroaching of regular trading hours. Opening range gap for Monday. I feel like I should take something off here. That would leave 10. I don't like it stalling like that. Yeah. Let's just do it. Right. Yeah. Trading view is lagging again. Oh, look at that. Finally. Yeah, I don't like that. I don't like that. It should have never came back up into this. I'm gonna have to mark it. don't like this. I should have just marketed it out when it was sitting down here instead of putting the limit order in. It's good enough. Mm. Regarding that sell side at 805. Let's see if it can sell off here a little bit. Come on. My trigger finger's itching. I'm watching that wick we're trading into right now. The bodies need to stay underneath half of that. I just don't trust it. I know Phil's online. I know he's getting me pull some shenanigans here. Yeah, and you never go wrong taking profits. Never, never go wrong taking profits. So definitely feeling the concern for where we're at right now because it's spending too much time. Come on, drop down there. Drop down there. Come on. Come on, come on, come on, come on. Ugh, you dog. Oh man. Well, I'm not monkeying around with that. So I know if I let this thing turn on me and I don't take something off here manually with a market order, it's gonna irk me. Trying to give it a second. I don't know. It should have dropped heavy. And something's up. Something's up. See how it's stuttering and it's not wanting to go down there? And that right there is not what I want to see. I do not like that there. Yeah, it's printing slightly lower lows, and they're defending 26,804s. For whatever reason, they don't want it to go down here. So it may be because I tweeted and told everybody that's what I'm looking for down here. So I'm not gonna let it, they're not gonna let you get off of it. Okay, so you can see we're above consequent encouraging that wick. That's my concern. I'm watching the candlesticks and anything above that, I'm just gonna mark it. Yeah, I don't like that. I spent way too much time in that consequent encouragement. Yeah, it's not good. Let me just take one off here. All right, so that's a consolation prize. It touched the limit order, but it didn't fill it, so I'm going to remove that. So if it come down and fill my next one, that'll leave the remaining five. Admittedly, I don't like where we're at. Feels artificial. So let me lock in some more. A partial's been taken, not on a limit order. So one of the things I taught is if I have a limit order and I'm near the end of a price run where I think it's been reaching for and it's close to my target, but I see my order not get filled, I just to appease the discomfort that I'm feeling and just to remove the wrestling matches inside my head that I know by experience I should do it. And if I feel like I'm trying to wrestle against taking a partial manually, take this. Stats. So we'll fade out the color. So if I have a limit order that, like you saw, it traded to the price but didn't book the fill, so it still kept me in. I've learned over the years it's the best scenario just to simply take a market order and peel it off. If you don't feel comfortable with it and it's not showing you sign, like it's showing no signs of wanting to continue here because it's spending way too much time inside that SIBI and spending too many candles around that consequent correction of that premium wick. So I just I teach that when you see that happen, it's better for you to just manually take something off. You don't go wrong. You don't make mistakes by taking profits. Okay, it's just the rules. Okay, nobody's ever wrong by taking profits. So here's the SIBI we're inside of, and we're spending way too much time. See how many candles are inside there? Even though we went to the high of it, but because we're seeing so many candles staying in this thing and not trading down to the sell side, that to me is indicative of something's not right. So if it's not right, and to be right would be taking those relative equal lows out at 26,804. And because it doesn't show any willingness to get down there quickly rather, I'm expecting this thing to rip my face off to the upside. And I have 10 contracts on, and my stop loss is, you know, barring some kind of a Philbilly candle coming in here, I would be okay normally, but it just looks like, in other words, I'm hearing the Jaws music theme. That's what I'm expecting. Mm. Yeah, it's not good here. But for the culture, I'll leave it on. I already know what's going to happen here. I'm gonna see myself get stopped out, and I'm wrestling with whether or not I want to take another 5 contracts off and just sacrifice the remaining 5 because it's spending way too much time inside that civvy. Way too much time. I'm happy that it has performed as well as it has, and it afforded me the opportunity to get out where I was getting out at. But because I have you as an audience, I want to stick with the trade idea because best case scenario with a worst case outcome is that we'll see some kind of manipulation that'll be obvious. And if it shows up, you'll see it. It'll be no doubt. I know if I went on Twitter and screenshot this and posted where my stop loss would be in one candle, it would go up there and run right through it. Without a doubt, it would happen. See how it's stuttering and doesn't want to go lower? And something's up. I'm seeing that black cat 2 times now. So deja vu. You know what that means? Oh, look at that. That's Phil. And that's the brakes. It won't even let me get out of it. There you go. There's the fills. It's okay. I still beat you, buddy. I can get rid of that limit order. Come on, cancel the order.